Wall Street's week is off to a rocky start as fears of an AI bubble continue to swell. Two of the so-called Magnificent Seven, those are the major tech stocks, they were downgraded by financial services firm Rothschild and Company Redburn. These stocks account for nearly 40% of the S&P 500. NewsNation's Alicia Nieves is live on Wall Street this morning. Good morning, Alicia. What could this slump mean for the markets?
Yeah, good morning, Hannah. Certainly going to move markets today. That's what all eyes are kind of focused on after what has been a rough week for Wall Street. Two camps here, right? One is on the idea that, what we've seen the last couple of days is a healthy correction given the record highs we've seen over the last couple of weeks. The other is that this is a warning sign over economic concerns. Just take a look at the way markets closed yesterday. You saw the Dow pull back, sliding some 500 points, while the S&P 500 notched its longest losing streak since August, both closing lower for the fourth straight day, that being beat by the tech-heavy NASDAQ, which recorded its fifth negative day in 6 sessions. But a big question for a lot of people looking at their 401ks right now is, could this losing streak end today or does it deepen? And to answer that question, a lot of eyes are going to be looking at earnings reports, particularly from the tech giant and chipmaker Nvidia. Reports from analysts are showing these latest earnings, the latest earnings from this company could result in a market swing of $320 billion in either direction, depending on the chipmaker's forecast for artificial intelligence. The $5 trillion company is seen as a bellwether for AI, and there's a lot of concern that we may be in this AI bubble that's about to pop. That's partly why stocks have kind of been pulling back, particularly those tech-heavy stocks. But it's also on the concern of this heightened economic uncertainty we've been in the last couple of weeks and the growing conversation about an affordability crisis happening throughout the country.
The Fed's inaction or slow reaction time to that uncertainty is showing its sort of ugly face right now. Them deferring their decision to cut interest rates when they've telegraphed their intention to cut interest rates could be devastating on the market. And by the way, the market sell-off right now is the market's way of telling the Fed, don't you do it, don't you defer that decision.
And a lot of the economic uncertainty that's weighing the market down has been around the data blackout that we have seen for the better part of 2 months now. That's starting to come to an end tomorrow in particular, 24 hours from now. We're expected to get the September jobs report. This will be critical in helping the Fed decide come December whether it's going to do another rate cut, Hannah.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.